All right, welcome back, everybody, to the Quick Carbon Podcast, episode 18. If it was not obvious from the title podcast, this is a podcast, so primarily audio with a shifting visual backdrop. If you want to support the podcast or myself in any way, then links to both PayPal and Patreon are in the description below. If you do, you can get yourself totally worthwhile stuff like generic Power Director firework effects next to your name, and maybe at some point, like I promised I would a while back, I'll try to do push-ups on camera and fail, because I'm not young and fit anymore. But regardless of all else, going into this, given all of the interesting things happening with, oil and the energy markets over the last few weeks, or really month and a half or so, I've kind of majorly neglected metals and a lot of the other things that we would normally talk about. So I'm doing this whole episode right here just to sort of go over metals and a few other things and actually catch up on that kind of stuff. So starting, of course, with the precious metals, gold. Since the last time we actually looked at it, gold inventories have gone up by more than double, from about 8.7 million ounces in storage up to 19 million ounces in storage, as a result of very, very reduced demand, because unlike silver, the majority of gold still is consumed by jewelry. And for the very few people who might not be aware, given that in the majority of the jewelry buying portions of the world, the jeweler shops are not even open at the moment, not that many people are exactly out buying jewelry. So that portion of gold demand has all but collapsed for the time being. So the larger portion of fresh gold coming into market out of the mines has had nowhere to go, so it's just being chucked aside. Despite those inventory buildups, gold prices have actually been going up from the 1600s up to, as of the moment, about $1,745 per ounce. That primarily being, because of the whole market collapse. And when that happens, everybody kind of rushes into gold and precious metals. So despite the demand collapse and the inventory doubling, gold prices did go up. However, likely because of those things, gold prices did not go up by as much as they might have otherwise. Now, unlike gold, silver is not majority consumed by jewelry. Silver's consumption levels are much more spread out. It, like gold, is also consumed for electronics and computers, however, in much greater amounts. And also, silver demand continues ballooning in the sector of making solar panels. If anyone wasn't aware, solar panels require silver in them. About a third of an ounce per square meter of solar panel is usually what it works out to. So computers and electronics, that demand hasn't taken anywhere near as large of a hit as jewelry demand, and continued construction of solar PV power plants or solar farms is still ongoing for the most part in most places. So silver demand has not collapsed in the way that gold demand has for the moment. Silver inventories had reached 323 million ounces in storage. However, they fell down, and by last week or so, they were down to 318. And by the end of this week, they were at 316.5 million ounces in storage. And silver prices, their roller coaster ride took them from being up towards near 19 at the start of this whole crisis, dropping down towards 12, and now being back up towards about $15.35 per ounce. Platinum and palladium inventories continue dropping, consumed in their overwhelming majority for the catalytic converters of cars and any other vehicle, basically. Platinum and palladium are a fair deal rarer. Most of the platinum group metals are. Their inventories are measured in thousands of ounces, not millions. Platinum inventories had fallen, as of the last time we looked about a week ago, from 157,000 down to 154,000, and now, a week later or so, they are down further to 152,000 ounces in storage. And palladium inventories, before the whole crisis began, were at about 35,000 ounces in storage, and now are down to a bit under 30, at around 29,800. Platinum prices had been up in the 900s, and as all this started, platinum took a dive down into the 600s, however, has now been coming back up and is at around 781. Palladium prices were up over $2,500 per ounce. They dove down towards $1,600, now are back up to $2,025 per ounce. And rhodium, inventories unreported, was up at around $13,000 per ounce before this all started. Dove down to $7,000 and below, but now has been coming back up to $8,200 per ounce. Now, in the regular metals, or the base metals, global aluminum inventories have increased over the past month and a half or so, from about 1 million tons in storage up to 1.3 million, while aluminum prices, as a result of the collapse, dropped from averaging pretty consistently around $2,000 per ton down to presently only around $1,500 per ton. Lead inventories previously had been basically stuck at, anyone who's been watching these videos for a while remembers lead inventories were pretty consistently at 67,000 tons in storage, and basically never really budged. They would go up and down by a few hundred at a time, but never enough up or down to round up or down to the next 1,000. However, over the last several months, it has actually moved, and lead inventories are now up at 73,000 tons in storage. And lead prices, as everything fell apart, dropped from also averaging around $2,000 per ton down to around $1,600 per ton. Nickel inventories, after springing back up to 235,000 tons in storage, have been gradually falling, now down to only 230,000 tons. Nickel prices have dropped down to a bit over $12,000 per ton. Zinc inventories had fallen over the course of the 2010s from over 1 million tons in storage all the way down to just under 50,000 tons in storage. However, over the last several months, they have taken a jump back up to 100,000 tons in storage. Zinc prices had been climbing in according to their inventory declines and were heading up towards $3,000 per ton. However, as everything fell apart, they've dove back down now and are down around $1,890 per ton. Global copper inventories fell from 1.3 million tons in storage down to 1.25. However, then over the course of all of this, they've climbed back up to 1.32. And as a result of everything as well, copper prices fell from $2.70 down to about $2.20, but now are back up averaging around $2.35 per pound. And global copper mining data for the previous year is now complete and compiled. So 2019 was basically a flat year for copper. It was slightly lower than 2018, but not significantly lower. So it was basically a flat year. In 2018, about 20.6 million tons of copper were mined worldwide. And in 2019, only about 20.5 million tons were mined. And we now have lead and zinc mining data for January and February, the first 2 months of this year. So with regards to lead, over the course of the first 2 months of this year, roughly 714,000 tons were mined worldwide, versus last year, within the first 2 months, more had been mined, 733,000 tons. And in terms of zinc, over the first 2 months of this year, 1.96 million tons had been mined. In comparison to last year, during the first 2 months of the year, less had been mined, 1.9. Uranium continues its slow, gradual price recovery. It had bottomed out about 2 years back at around only $18 per pound. It's climbed back up since then very slowly, now back up to about $28 per pound. For reference, the highest it ever was was about $136 per pound, and until the Fukushima accident, it was averaging usually around 50 or so. And since that accident, Japan has been restarting their nuclear power plants one by one, gradually re-increasing demand or reintroducing demand, as in turn, Germany has been shutting down their plants one by one, so those have kind of canceled each other out. However, demand has been increasing in total because of new nuclear power plants being brought online over the same period of time in China, India, the UAE, Slovakia, I believe, or it may be Slovenia, a few new ones in southern Russia. Graphite is down from what it had been averaging a couple months back, now averaging between $2,400 and $2,500 per ton. Lithium prices have collapsed by a fair deal as a result of both the market collapse and the current situation, and however also a result of increased mining capacity coming online. A lot of said new capacity constantly coming from, that giant 100-mile wide salt brine flat down in southern South America. Lithium prices having been over $10,000 per ton, now down to $6,213 per ton. Vanadium prices averaging in the lower sevens, between $7 and $7.50 per pound. Phosphate rock, one of the primary things we need as plant fertilizer to be able to grow as many crops as quickly as we do to, feed our population size, has been gradually decreasing in price over the past several months, now currently at $72 per ton. For reference, its highest price was a little over 10 years ago at around $400 per ton, or I believe over $400. Potassium fertilizer, which is made from potash, which is basically just the primary mineral form of potassium that we mine, currently averaging around $245 per ton. Its highest price ever was around the same time at around $900, and the plant's super critical needed nutrient, nitrogenous fertilizer, aka basically nitrogen, you're basically just pricing the nitrogen, currently at about $231 per ton. Highest price ever was about $750 or so. Our nitrogen, of course, we don't get from minerals from mining. That we have to extract out of the air itself via the Haber process, which also itself consumes a lot of our natural gas and also requires a lot of our energy as well, such that consistently over 1%, or an entire percent of the entire world's energy consumption or energy expenditure every year, is solely consumed in the extraction of nitrogen from the air. All right, that's it for this catching up episode of sorts. Thank you everybody for sticking around and listening. Hit the like button if you enjoyed. As always, subscribe if you haven't already. PayPal and Patreon links are down there if you want to help keep everything going. But thank you everyone for even being here to begin with. May God be with you all. I will see you all around next time.